Today, we're going to review the 5 different life insurance policies, what they are, how they work, and how to choose the right policies for your needs. Let me ask you a question. If you pass tomorrow, would your family be okay financially? And no, I'm not talking about the thoughts and prayers kind of okay. I mean, real dollars. If your answer is, I think so, or worse, they've got GoFundMe. Buckle up. We need to talk. Hey everyone, Kevin here with moneytreeandme, broker by day with 20 years of experience in insurance and financial services, and snarky sarcasm machine by night. If you're keen on making the best financial decisions, eliminating debt with revolving interest, providing a safety net for yourself and your family, and can deal with a bit of cheeky sarcasm, I'll invite you to follow moneytreeandme on YouTube for regular financial education from budgeting to maximizing your tax advantages. My content is also available on Facebook, Instagram, TikTok, and Blue Sky if you're more of a scroll of doom viewer type of a person. Now, the information I'm about to share is applicable to just about everyone living in the United States of America, but I'm currently only licensed to do business in the state of Florida. So anyone can benefit from this information, but if you're a Floridian and appreciate the information you've attained in this crash course and would like me to broker life insurance for yourself and your family, I'll share exactly how you can do that toward the end of this video. I know just saying the words life insurance makes your brain consider a spontaneous nap, but stick with me, because this could be the difference between your family grieving and your family grieving while also inheriting a mountain of bills, maybe even a cursed minivan. So, what is life insurance? Well, life insurance is basically adulting at its finest, a contract between you and the insurance company. You pay them money, and in return, when you die, sorry to be the one to break the news that you're not going to live to age 300, your loved ones get a lump sum of tax-free money. That money helps cover lost income, debts, funeral costs, kids' college, and basically stops your family from making a GoFundMe account in your honor because they simply lack the funds to appropriately bury you with dignity and still have the means to thrive financially after your passing. And yes, policies vary, which is code for don't just Google one and sign up while you're watching Netflix. Quick question, confess in the comments if you bought life insurance because a friend started selling it and you felt guilty saying no. Be honest, it's okay. If the policy you have right now doesn't turn out to be the best option to serve your interests, the information in this video can help guide you in the right direction. That being said, did you know that if you have a permanent life insurance policy that accumulated cash value over time, like a whole life policy or a universal life policy, you can actually roll the value of that policy into a new permanent policy that better suits you without losing its value or being subjected to tax consequences? Just the same as you can roll your 401k from one employer-sponsored plan to another, or roll it into an IRA, you can benefit from a rollover from life insurance policy to life insurance policy. You'd be surprised at how many clients I have who didn't know that and were conflicted about canceling or changing policies because they were afraid to lose the value that they had accumulated in their policies over the years. Go ahead and hit the like button if your financial plan involves hope nothing bad happens and vibes. Now, let's talk about how life insurance works, the grown-up version. So here's how it goes. You pay premiums monthly, quarterly, yearly, or in full with one lump sum in certain cases. If you pass while your policy is active, important detail, your beneficiaries get paid. Some policies build cash value, meaning you can either borrow against it or use it like an overpriced savings account, depending on the type of policy you buy. More on that chaos in a minute. By the way, insurance companies stay rich by number one, doing death math, aka actuarial science, which is essentially using your age, your basic medical information, location, and number of other variables statistically to predict the likelihood of you living to a particular target age, and then factoring that information into your premium cost to maximize the likelihood of profit, even after paying the beneficiaries potentially hundreds of thousands or millions of dollars upon your demise. Number two, they invest your premiums to gain interest on them over time, similar to how your bank does with your money in your checking and savings accounts, earning fractional gains. Number 3, benefiting from the premiums you've paid if you have a term policy and the term ends and is not renewed, or if you choose to just cancel your policy outright before your family needs it. Basically, they win either way, unless you're smart and choose the right policy for your family, in which case a win-win scenario can be achieved. Now, let's have a glance at the 5 main types of life insurance, aka choose your fighter. Number 1, term life insurance. This is your starter pack, generally coverage for 5 years to 30 years. If you pass during that time, ta-da, your family gets a payout. If you don't, the policy ends. Congratulations, you're alive, your beneficiary gets no money, but hey, small wins, right? The pros, it's cheap and it's easy to understand. The cons, no cash value. Nothing will accumulate over time that can benefit you in your lifetime. Also, it gets pricier if you try renewing at 60 when your policy matures and your joints pop like bubble wrap. These policies are most ideal for families with limited cash flow and who may have young children. They're also good for mortgage protection and people who have the ability to accumulate large sums of money from their wages and investments and only need life insurance as a holdover until they can create a nice nest egg over time. Number 2, whole life insurance. Now we're getting fancy. Coverage lasts forever because apparently death is inevitable. Who knew? Part of your premium builds cash value. It's like a forced piggy bank with a really expensive snout. The pros to this type of policy is lifetime coverage. Doesn't matter if you die rich or poor, your family will still get paid. Also, it accumulates cash value. In addition to that, premiums don't increase. They will stay flat. Now, we also need to take a look at the cons, right? They're going to include the fact that whole life policies tend to be more expensive than term insurance because its financial value increases over time. Also, cash growth is slower than your grandma's Wi-Fi. That's not a good thing. Also, not very flexible in general, like your uncle's views and talking points at Thanksgiving dinner. So what kind of person is a whole life policy generally ideal for? Well, one who's interested in estate planning to leave assets for family no matter what age they pass. It's also beneficial for covering final expenses, which is ideal because most people can get just enough life insurance to cover burial and funeral expenses to keep costs low, right? And then couple it with a simple term policy to cover their family in the event they have an untimely demise before they become elderly or can build a more robust financial legacy. Coupling a small whole life insurance policy just for burial expenses with a term policy is by far one of the most ideal strategies for working class people because it alleviates families from having to mitigate time and money necessary for probate proceedings upon the death of a breadwinner while having quick access to funds for burial while paying relatively little for hundreds of thousands, if not millions of dollars for life insurance. Basically, this creates a safety net that doesn't break the bank. Number 3, straight universal life insurance, or UL, not to be confused with its 2 cousins, which we'll talk about shortly. These policies were hot back in the early 1980s when they were in their relative infancy in popularity. They were abused by a number of professionals who touted their flexibility, but this would come back to haunt many people who were not properly informed of the potential fallouts associated with maintaining this kind of policy over time. Anyway, universal life policies are where things begin to get more adjustable. Premiums and death benefits can change based on your needs and how the policy performs over time. Let's look at some of the pros and cons in closer detail. Pros for universal life policies include flexibility in premium payments. So someone can start out making relatively low payments over time, increasing them to serve as catch-up premiums as their career and earning potential increases. Now, they do have some cash value, maybe not quite as much as other types of permanent policies, which tend to accumulate more cash value over time. Now, for the cons, they do require management, and this is something that is not ideal for most people. Now, another potential con is that it can lapse if it's underfunded or improperly managed. Yet another huge potential pitfall. Like a toddler, they need to be constantly paid attention to or everything could go sideways. So, who are straight universal life policies generally ideal for? Well, People with financial ADHD who know life never sticks to one script and will micromanage their policy if necessary. In my humble opinion, if you have to micromanage your policy, you need a different policy. To be honest, I can think of no one who couldn't make a better decision by choosing any other policy than a straight universal life policy. Just saying. Honestly, I'm not even sure why they still exist, but that's a discussion for another time. Now, on to number 4, variable universal life insurance policies. They're one of straight universal life policies' more mature cousins. This one says, hey, want life insurance and to invest in the stock market? Cool. You get to invest your cash value in sub-accounts, basically mutual funds with commitment issues. Now, the pros that are affiliated with a variable universal life insurance policy include high growth potential, higher on average than any other type of life insurance policy because your money is invested directly into one or more investments or indices, which, by the way, is plural for index. The cons to this policy include a chance of losing your growth and even some of your premium payments if the market really crashes. But just like any other security, it can also grow back as the market returns. So it's definitely not beginner friendly, but for those who are wealthier and have additional assets that are substantial and stable, it can serve as a great way to increase their wealth and their financial legacy for their survivors with both upside growth in addition to a death benefit. As a result, it's ideal for high-income folks who are bored and allergic to safety nets. All right, and finally on to number 5, indexed universal life insurance policies, the other more mature cousin of this straight universal life policy. This one tries to give you upside potential growth without all the risk of its more cavalier cousin, the variable life insurance policy we just talked about. Your cash value is tied to a market index, like the S&P 500 for instance, but your money is not actually in the market and subject to market risk. Plus, there's a cap and a floor, meaning when the market is up, you're rewarded with gains to a maximum ceiling determined by the provider, but when the market is down, there's a built-in floor that will protect your growth so that you don't take a direct hit. In addition, as long as you don't violate IRS rules, your money will grow tax-deferred forever with no cap on accumulation and can even be passed on to your survivors tax-free. The pros to an index universal life policy include growth potential with protection. Also, they're ideal for unlimited tax-deferred growth that can be passed on to your survivors tax-free. The cons to an index universal life policy include the fact that it is a bit more complex to understand than a basic term policy or even a whole life policy. Also, it comes with fees that may make you say words that you didn't know you even knew. So it's ideal to weigh the growth potential and tax-deferred benefits with the cost of the policy to ensure that the policy is right for you. This is why the IUL is ideal for people who have higher than average earning potential, who wish to keep capital gains taxes at bay indefinitely, and keep the government out of their wealth transfers from one generation to the next. Now, an indexed universal life policy is going to be good for a person who has higher earning potential than probably the average person, and they want a taste of the market without eating the whole risk sandwich. So, no one needs all of these policies, just the ones that fit your goals, not your cousins and not your barbers. Next up, when to buy life insurance. Easy. We'll talk about 3 times to consider buying life insurance. Number 1, when you have dependents, debt, or pets who expect a lifestyle of royalty. No joke, there are literally people who buy life insurance for their pets. Number 2, when you're young and healthy. Translation, it's cheaper when your body is not withering and falling apart. And number 3, when you've got an emergency fund and your Roth IRA isn't crying for attention. So make sure you have savings for a rainy day and that you've maxed out your Roth IRA contributions for maximum long-term gains. Oh, and if you're over 35 and still saying I'll get around to it later, congrats. You now qualify as later. Time to act. Now, let's look at how to choose the right policy like a pro. Number 1, work with an independent broker, like yours truly, who isn't just pushing a handful of insurance carriers. You will benefit from working with a broker who has access to no less than a dozen carriers from which to choose. Ideally, even more when you're considering permanent life insurance like whole life or one of its more complex cousins. Competition drives prices down, so you get the best for your return at a low cost. So keep that in mind. Number 2, aim for 10 to 12 or more years of annual income and coverage, especially if you have a family. There are a number of ways to determine how much life insurance you might need, and your insurance broker can help you use these methods to ensure that you're not overinsured or underinsured. And number 3, review your policy every few years or every time your life goes off script. And if all else fails, remember, doing something beats doing nothing. So make sure your broker is experienced, well qualified, transparent, and provides education so that you fully understand your options. So if you're a Florida resident and you're interested in getting a quote, you can either click Learn More if you're seeing this as an ad, or you can just go to my main profile, then you can click the link there and you can scroll down to Ethos Life Insurance Quotes, No Medical Exam. Click there to answer some preliminary questions that will help me determine the best carriers to provide you with the most competitive rates and estimate your insurability so that you can get access to my resources for quotes. I have dozens of carriers available to choose from, including carriers who have higher risk tolerance for people with medical challenges, and even carriers who will ensure that your estate plan and living will is also included with your policy at no extra cost. Final thoughts. Life insurance isn't fun, but neither is knowing that your family may have to scramble when you're gone. So ask yourself, would you rather be remembered with dignity or a GoFundMe link and awkward social media tributes? And hey, if this breakdown helped you at all, or if you're now at least mildly afraid of your own mortality, smash that like button and follow me before you forget and get distracted by another cat video. Thank you so much for watching. Don't forget to follow me on YouTube or other social media platforms for regular educational content. I've been Kevin with moneytreeandme, providing better security and ensuring better lives. Make it a great day.